Good morning, everybody. Welcome to today's morning coffee with Mike. Today, we are talking about something very important. We're talking about breaking patterns of negative behavior as they pertain to stocks. But I think that this is something that can really be applied to all areas of life. Now, if you have certain patterns that you've recognized as negative patterns and you want to break this, then this is for you. If you uh, perhaps don't realize that you have certain patterns of negative behavior, but you're not getting the results that you want, this is also going to be for you. Now, in trading, there's a common phrase that we could be right or we can make money. Let me know if you've heard this. Type into the chat. Let me know if you've heard that one. We could be right or we can make money. A lot of people confuse the two of these things. I used to confuse the two of them as well, right? Like if we're right, we should be making money. That just seems to make sense. Well, in trading is not as simple as 2 plus 2 equals 4. It's not just a simple math equation. It's more about there's two sides of an argument, two sides of a trade where you might seem like you're right, but if the market thinks differently than you do or your side of the trade, being quote unquote right can cost you a lot. So that's why we don't want to think in terms of, well, what's right or wrong. What we want to think about is really what's leading us in the right direction as far as our trades go. So, when we have patterns of behavior that cause us to consistently lose money, I call those the negative patterns. Those are the negative patterns, right? So we want to break those negative patterns of behavior today, and we're going to be focusing on how can we break those negative patterns, the things that are leading us to what we don't want. Now, when it comes to trading, let's keep it to trading for now. Well, when it comes to trading, well, we need to one identify what those patterns are, and the way that we're going to identify what those patterns are is first by seeing, well, what are the results that we're getting? What are the results that we're getting from our trading? Are we getting the kind of results that we want from our trading? Namely, more profits, right? You tell me, well, what kind of results you want from your trading. I think that most of us want our equity curve to be steadily rising, right? That seems to be the most common reason why people get into this business of trading. So let's assume that that's what you guys want. Great. Steadily rising equity curve. So if you find that you are in a boom and bust cycle, or maybe your equity curve is steadily going down, we want to break that cycle. One of the beauties of trading is that every action or every result that you get in trading is by our own creation. We're the ones that place the order to buy, we're the ones that place the order to sell, we're the ones that figure out how much. So if our actions are not leading us to the result that we want to get, then it's also on us where we could change what we're doing. It's no one else's fault. It's not the market's fault. It's not anything else's fault other than ours. And the more responsibility that we take for our trading and for our results, the greater opportunity we have to be able to shift the results, to break the different patterns of behavior. And if you're if you've ever said, and I've said this before too, now where it's the market's fault, or maybe it's the system, maybe it's something else. The answer is no, it's not. The answer is that it's us, and we need to focus on us and what we're doing, and figure out, well, what is it that's not right? How can we start to figure out what's not right? How can we figure out how to improve? The step one is always awareness. We need to become aware of now what it is that we're doing, what it is that we're not doing, well, what it is that we need to do, and what results that we're after. Think of all those things, write those things down. Sometimes we need an outside perspective to help us see what we can't see. Sometimes we have blind spots. My good friend Adam Sarhan talks about blind spots. He calls them mental walls, right? Sometimes you can't see over or through the wall. Sometimes you need an outside perspective to help you see those things. If there's somebody that you trust that gives you a different perspective than what you're seeing, and sometimes you might need to consider what that other person is seeing. Sometimes you might need to take a step back and get a little bit of perspective from that other person. Now, how can you find somebody that you trust, especially when it comes to trading, right? Because most of our friends and family don't really do this, right? Well, in most cases, well, we're kind of alone in this. If you have other people that you're in a trading group with, or you're maybe you know a few people there, then great, that's wonderful. That's a great blessing. But for the vast majority of us, we don't know anybody else that's also trading. That's how it was for me when I first started out. Nobody else really knew about trading or knew what they were doing, and weren't really in a position to give uh, good advice. They had well-intentioned advice, but not really the type of experience that can lead to the result that we're after. So how can you get around better people? People that can give you that perspective that you need. Well, first is this right here. We're connecting right here over the internet, whether you're watching on Instagram, you're watching over on YouTube, Facebook, LinkedIn, Twitter. And why don't I scroll down and see if any comments are coming in on Twitter? If you guys have comments, go ahead, type them into the chat. You need to get around other people that could give you those kinds of advice, and that's why I'm here and doing uh, these live streams every single day. It's why you're invited to come on live and to schedule these lives ahead of time, so that way we could have a good conversation around that, and that way you could get additional perspectives. It's why I built the VIP portion of our elite program, not to plug, but that's really the reason why. Like, people need to have an outside perspective, somebody that they could trust, and for some reason I tend to be that guy for a lot of people, and so they'll get uh, these additional perspectives, and it's really it really comes down to the types of questions that we ask, and it's not just uh, having an outside perspective ask you questions. It's also you being willing to have an open mind and ask yourself the questions. Somebody else might be asking them, but you need to be able to ask them of yourself. When you ask the questions of yourself and you are open to the answer that comes back, that's when you're able to make change. When we have this feeling of wanting to be right and this desire to be right, and if we're not getting the result that we want, if we have a strong enough desire to want to be right, in that we don't want to change, right? We just want to feel like we're right, then the unfortunate reality is that we get to keep what we want, which is being right, even though we're not getting the result. Well, we get that feeling, but without the result. Hopefully that makes sense. If we keep on doing the same things and we're not willing to change, then we'll keep on getting the same things. If we want something different, we have to be willing to make the changes to get the different result, to get the result that we're after. Hopefully this makes sense. Let me know what questions you guys have. Scroll over here on Instagram. I'm also trying to pull up Twitter. Yeah, there's Twitter. See a few people watching over on Twitter. You guys type into your questions. YouTube, LinkedIn, Facebook. Let me know what questions you guys have too. Let's scroll through Instagram and see what questions came up. Sid would like a suggestion on maintaining a stop loss because he has trouble maintaining a stop loss. Okay, so some questions for you, Sid. First question is why do you feel that you have trouble maintaining a stop loss? What's your feelings about stop losses? Depending on your feelings of stop losses, a couple of common ones that I've heard is that the market makers hunt for stop losses and try to take them. And if I place a stop loss, then I'm signaling to my broker that, hey, I want to get out at this price, and they'll just drop the price to that whatever your level is and wipe you out. If that's a belief, right? And if you have that belief, that's fine. A lot of people have that belief, but that would be the type of belief that would prevent you from maintaining a stop loss, right? If I think that I'm just going to put this order with my broker and they're going to go and take my money, then why would I do that, right? So we need to figure out what your beliefs are around stop losses. Perhaps it could be a competency. Do you know how to set proper stop losses? Do you have rules? Do you have a process? Do you have a system that tells you where you should be placing a stop loss? For example, the way that I like to place my stop losses is to look for support levels across time frames, not just on one time frame, but on multiple time frames. So I'll look at where is a support level on a weekly chart, on a daily chart, and also down on a 30-minute chart. And I want to, the more time frames I could get to overlap, the better. It's kind of like building a floor. The firmer this floor is, the more rock solid that stop loss should be. And it's not where a stop loss is never going to get tagged. If a stop loss gets tagged, it should tell us that, hey, there's something wrong with this trade and we don't want to be in it anymore. So the first thing I'll do is look for those multiple time frames, look for multiple support level, look for support levels that cross multiple time frames. Then I'll look for a few other confluences around those stop losses. I'll look for things like moving averages. Some of the common ones that I like to see are the 10 EMA, the 21 EMA, sometimes the 50 SMA around that the stop loss level. I'll look for an anchored VWAP, anchored volume weighted average price. And there's some ways to connect that to a proper level. We don't have time to go into that here, but we could do another show just on anchored VWAP. I'll look for Fibonacci retracement levels. And really, those are the main things that I would look for as confluences. But the main idea here is that we want to have different confluences around the stop loss that we're considering, because the more confluences that we have, the firmer that floor should be. We don't want to pour in random variables into the stop loss. So if you heard me say that, oh, Mike looks at the 10 and the 21 and the 50 SMAs, then now all of a sudden you're going to throw that onto some trade. Now, if your plan is to use those things consistently, then more power to you, try them out. If you're throwing in random variables from different things and you're only going to use it once, well, then that's not the type of confluence that I would look for. We want to build a system, and in that system, we want to be consistent with the things that we're going to use. So hopefully that helps a little bit. Happy to talk to you more about it. See what other questions came in. We've got a couple minutes left here. So someone from Nigeria asking how to trade. The first thing to do, no matter where you live on the planet, the first thing you want to do is acquire the skills that are needed to trade successfully. If your objective is to trade successfully over a long period of time, many years, perhaps your lifetime, then the first thing that you're going to want to do is to gather and develop the skills that are needed for trading success. That's why I wrote this book here, The Trading Mind Wheel, to help you understand The skills that are needed for trading success give you insights on the mindsets that are needed for those skills and share how I've gone about mastering each of these skills. You could get the Trading Mind Wheel on Amazon, Barnes and Noble, and basically wherever books are sold. Okay. Sid, follow up comment from Sid. Sid says, fear of me being wrong makes it difficult for me to maintain the stop loss. Okay, so that's good. That's a great start. That's also fairly common. Don't want to be wrong. We place this trade. I don't want to lose money. Part of trading is understanding that all trades, all traders will experience losses. Another thing to understand is that we do not need to be right all the time in order to make money in the market. In fact, you don't need to be right 80% of the time. I know a lot of people on Instagram and on YouTube and all these other social media places tout high win rates as the thing. 90% win rates, 95% win rates, even a 70% win rate. You don't need a high win rate in order to make money consistently in the market. What you need are a couple of factors. Uh, Win rate does matter, but also what is your average win and what is the size of your average win and what is the size of your average loss? Here's a personal example. My average win rate is about 45%. So I'm losing trades more often than I'm winning trades. Now, how am I able to sit here and talk to you guys? Right? How did I get a book published by having a 45% win rate? Well, on my winners, I'll average about 10%, and on my losers, I'll average about 4%. So my winners are more than twice the size of my average loss. So picture a coin. If you flip a coin and it lands on heads and you get paid $2, but if you flip that coin and it lands on tails and you lose $1, then you would flip that coin all day long, right? And you wouldn't expect for it to land on heads every single time. That's kind of what trading can be. So, depending on your style, Sid, you might be able to have a lower win rate and still be able to come out ahead. I don't know what your system is, but if your system does not rely on being right all the time, then you could cut your losses short, let winners run. That's what's worked for me. That's what's worked for many of the people that endorsed the book on the back. That's what has worked for this guy here. Not sure if you could see it on Instagram. You could probably see it a little bit better on YouTube. The forward was written by Mark Minervini, who is a two-time U.S. investing champion. He was written up in Jack Schwager's Market Wizard series, and he was kind enough to write the forward on the Trading Mind Wheel. His win rate is about 45-50%, and also has similar numbers on the upside too. So you don't need to be right all the time. You just need to have your winners be bigger than your losers. And if that's the case that you want to go for something like that, then find a system that allows you to do that. There's a lot of them out there. I share mine. I outline it in the book. Mark has outlined his in the book. A lot of people have written about this kind of stuff before me. It's not new, but you don't need to have a high win rate in order to come out ahead. Think of a stop loss as a seatbelt, right? Or going if you're going bungee jumping, right? Maybe you're a thrill seeker If you're going bungee jumping, you have the cord hanging you from the bridge, right? You're not just jumping off the bridge. You've got that cord. Stop loss happen as it behaves in the same way. It prevents you from really, really hurting yourself. Let's see. Maybe time for one more question. From Justine, how do you beat against bad psychology? Yeah, that's basically been the topic of this whole show, hasn't it? But the main idea here with bad psychology, well, we could call it bad psychology, but it's really understanding what our beliefs are. We have many beliefs, and most of them live in our subconscious. That means that we're not always thinking about what our beliefs are. They run in the background and they allow us to take certain actions, not take other actions. Because these beliefs live in our subconscious and we're not always thinking about them, we can sometimes forget the beliefs that we have. And if we forget the beliefs that we have and they're running in the background and causing us to make certain actions, then we'll continue to make those actions if we continue to hold on to those beliefs that are in our subconscious. Now, what can we do about that? Well, we take an action, we do some exercises that help us become aware of the beliefs that we have. I outline many exercises in this book here, but I'll give you one of them right here. So, the first exercise that you want to do is to think about the beliefs that you have about these three categories: about trading, about money, and the beliefs that you have about yourself. Take some time and write out as many beliefs as you could think about trading, about money, and about yourself. What constitutes a belief? Well, if you're hearing this for the first time, might seem daunting. A trading belief might be that if a stock is in an uptrend and it consolidates and it breaks out, then that makes it a good trade. That's one example of a trading related belief. Another trading related belief might be that the market's rigged, right? I had that belief at one point. My parents told me that. That was a belief. Think of as many beliefs as you can that you have. Well, whether you think that, oh, I really believe this or not, just whatever comes to mind. Stream of consciousness, write it out. And then after you write out your beliefs, you're going to want to take a look at them and start to see, well, what beliefs are leading me closer to my goal, my outcome, the result that I want to get. If you are trading, then part of my assumption, and I don't like to assume, but because I'm sitting here talking to a camera, I'll make some assumptions. I'll assume that you want to make money with your trading. If that's correct, then you could go through your list of beliefs and see, are these beliefs helping me get closer to, or are they driving me further from my goal? Likely, most likely, you'll have some that are helping you and others that are not. It's good to be aware of all of them and to see, well, what's leading me closer to, what's driving me another way. What, and then you could start to question all those beliefs and start to figure out where they came from. Do you want to hang on to this belief? And it's also important to understand that all the beliefs that we have, they're all trying to help us in some way. Often, what happens, well, when people think about trading psychology and about doing exercises like this, a lot of people feel at war with themselves. They start to question, am I a good person? Uh, well, what should I really think? Am I on the right path? All these things, and they start to internalize it, and they might feel bad about themselves. But it's not about feeling bad about yourself. It's about you have all these things in that you have like a certain belief, and they're all trying to serve. Another thing too is that we are not our beliefs. We are consciousness. We're the consciousness of our beliefs. So we could decide what beliefs we want to hold on to, what beliefs are serving us right now towards a certain goal. And maybe we find another belief that used to serve us, but isn't serving us now. And because it's not serving us now, we could, and when we become aware that this belief is not serving us now, it could start to take away some of the energy from that belief. It's just like if you grew up believing in the Easter Bunny or Santa Claus or the Tooth Fairy or whatever, as a kid, that belief served us, right? Got you excited on Christmas Day, got you excited on Easter. You got all these nice presents. But later on, as an adult, the belief's not serving us. And at some point during our childhood, most of us uh, stop believing in those kinds of things. And at this point, those beliefs are not strong. So, just like, in a similar way, if there's a belief that's not serving us for our trading, that's leading us to the result, which is getting more money, we could start to take energy away from that. If we start to question, market is rigged, I maybe I have a belief that says that the market is rigged and therefore I can't win. Well, if I have that as my belief, then am I going to be able to trade very well? Most likely not. If I take the energy out of that belief, then it starts to pave a better path for me to have greater success. Those are some of the ways that you can start to beat this or improve psychology. I talk about a lot more in the Trading Mind Wheel book. So if you haven't gotten the Trading Mind Wheel book yet, go get it again. It's available on Amazon, Barnes& and Noble, Walmart, Target, all these places. And that's it for today. Hopefully, you found today's morning coffee with Mike helpful. I'll see you back here again tomorrow at 9:30 a.m. Eastern. Take care. Much love. Peace out, everybody.